Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Hump Day, and it's August 24th. We got kind of a quick one today, as we only got one item on the economic news scheduled for today, and that is the existing home sales for the month of July. So back in June, we had 5.57 million seasonally adjusted rate for the month of June, and it was supposed to be for July the forecast at 5.5, and it came in at a dismal 5.39 on the million, just on the heels of a nice hot number we got, the best number we've actually received in 8 years for new home sales yesterday. And of course, this kind of puts a little water on the fire, so to speak. So let's take a look here. We got the stock market is currently down, and then we'll take a look at the bond market, and the bond market now is rated down about 12 basis points. So this may create some lenders to price for the worst, which means not price for the worst, but pricing a little bit worse than it was yesterday, or roughly about the same. So depending when it is. It's been kind of hovering. When I first came onto here, it was hovering between 3 and 6 basis points, and then just in the last few moments went down to 12 basis points. So just above the 50-day moving average. We got the 10 and 25-day. We did close above it yesterday, so that's a good sign. But this week, I think you can mostly see this sideways pattern here, all because everybody wants to see Janet Yellen's speech on Friday. So you're seeing the stock market down, now the bond market down. You're seeing kind of investors pulling money out of the markets because of the uncertainty as to the possibility of rate hikes. Last week, we've been getting a lot of Fed talk. And even this week, we had a couple with the Fed members talking pretty hawkish comments out there as time is near. Now, September's meeting, it's only supposed to be about 15% chance of a possibility of a Fed hike, and about 48% in December. They're kind of projected more in March of next year, but December might be kind of a throw-in for end of the year to kind of back up what they've been kind of saying all along. But again, we've been getting a lot of hawkish comments and basically saying not to discount September's meeting. And now they basically want to see what kind of a tone they get from Janet Yellen on Friday when they meet in Jackson Hole, Wyoming, at their retreat up there. So that's going to be all important. If it comes in a pretty hawkish tone, it's going to be bad for obviously stock markets, but that will bode well probably for bond market, as a lot of that money will come into the bond market, will help out interest rates on Friday. So be very cautious here. I would be very cautious with the float because we don't know which direction she goes. She has been kind of more of a dove, but we've even had a few hawkish comments from some typically dovish Fed governors there. So, all right, folks. Today pricing's down a little bit than what it was yesterday, as money's coming out of both markets as well as the stock market. All right, you guys have a great day. We'll see you guys tomorrow. Tomorrow we'll have a bit more news, including the weekly jobless claims, and we'll look forward to see you guys tomorrow. Take care. Have a great day. Thanks. Bye.